They called him the Tiger, not because he was loud, but because, like a tiger in tall grass, Julian Robertson could wait. He could stalk a trade for weeks, sometimes months, until the moment came when patience turned to precision. And then strike. One calculated move. One clean kill. That was his edge. Julian Robertson didn't just build a hedge fund. He built a way of thinking, a mental blueprint that separated hunters from the hunted in the chaos of the markets. But here's the question. In today's world where every trader is chasing dopamine, notifications, and 100 flashing price alerts, can you still think like a tiger? Can you sit still long enough to see the whole jungle move? Or have you become just another prey of your own emotions? Because make no mistake, Robertson's genius wasn't his stock picking. It was his psychology, his discipline, his ability to remain ferociously calm when everyone else was bleeding fear or greed. He once said, "The biggest mistakes in trading aren't analytical, they're emotional." And in that one sentence lies a truth that has broken more traders than bad data ever could. When Julian founded Tiger Management in 1980, Wall Street was a jungle of uncertainty. Inflation was biting. The dollar was volatile. And yet, within 2 decades, Robertson turned a mere $8 million into over $22 billion under management. But the number isn't the story. The story is how he thought. How he trained his mind to think like a predator among noise. Strategic, patient, lethal. He didn't chase every move. He observed them. He studied people traders, executives, central bankers like prey patterns. He once remarked, half joking, half prophetic, "You don't trade the stock. You trade the people behind it." This was the foundation of his mental architecture, an architecture that modern traders often forget in the algorithmic rush. Because here's the paradox. In an age of instant information, the true edge is still time. The ability to wait, to analyze without reacting, to remain emotionally detached while others panic. That's what it means to think like a tiger. It's not aggression. It's control. It's not speed. It's stillness. And if you're a trader today, sitting behind a screen, heart racing with every red candle, you must ask yourself, are you thinking like Julian Robertson? Or just reacting like the crowd he used to eat alive? Because the market doesn't reward intelligence alone. It rewards emotional architecture, a mental design strong enough to survive chaos. And Robertson's blueprint? It was forged in silence, discipline, and a relentless study of human nature. So tell me, if you were in Julian Robertson's shoes, would you have the patience to wait for the perfect strike? Or would the noise pull you in too soon? Drop your thoughts in the comments below, because in the next section, we'll step inside the paradox that made Robertson's mind both powerful and painfully human. The inner conflict or market paradox. Julian Robertson understood something that few traders ever truly confront, that the enemy is never the market. The enemy is the mind watching the market. You see, every trader dreams of control. Control over entries, exits, setups, strategies. But the real battle, the one Julian fought every single day, was control over himself. He once told his team at Tiger Management, "We can't predict the market every day, but we can control how we react to it." And that is the paradox, because the very thing that drives us to succeed, the hunger to be right, to win, to dominate, is the same force that, unchecked, destroys us. Julian's traders weren't ordinary analysts. They were some of the best minds on Wall Street. And yet, even inside Tiger, fear and ego lurked like shadows. Robertson saw it in their faces. The excitement of profit, the panic of drawdowns, the overconfidence after a winning streak. He'd pull them aside and ask quietly, "Are you trading your thesis? Or your emotions?" Most couldn't answer. That's the paradox of trading like a tiger. You must feel the hunt, but not become the hunt. You must be aggressive in conviction, but patient in execution. You must believe in your analysis, yet doubt your own bias just enough to survive. Julian lived inside that tension, confidence versus humility. He believed the markets reward deep conviction, but only when paired with the discipline to admit when you're wrong. That's why his greatest strength wasn't his aggressiveness. It was his ability to retreat. When the storm hit in the late 90s, the dot-com frenzy, Robertson faced his greatest test. The world around him had gone mad with tech stocks. Every headline screamed, "New economy." Everyone was making money, except him. Because he refused to buy what he didn't understand. He saw companies with no earnings trading like empires. He saw speculation replace logic, and he knew the tiger's jungle was burning. But here's the painful irony. His discipline, his caution, his refusal to join the mania cost him everything. Tiger management began bleeding capital. Investors pulled money, and the man who had mastered the art of patience was punished for it. There's a lesson here, deeper than any trading rule. Even the most disciplined minds face the agony of being early. Julian Robertson was right catastrophically early. When the bubble finally burst, he had already shut his fund down. Imagine that. You spend 2 decades mastering your instincts, and in the end, you lose not because you were wrong, but because the market stayed irrational longer than discipline could endure. That's the paradox every trader must face. The market doesn't reward correctness. It rewards timing. And timing demands humility. The humility to survive being wrong until the world catches up to your rightness. Julian once said, the hardest part isn't finding the opportunity. It's holding your conviction when the world laughs at you. And that's the essence of trading psychology. Can you stand alone in the noise? Can you hold your truth without needing validation? Robertson could. And though his fund fell, his mindset endured. Because the tiger doesn't measure himself by every hunt. He measures himself by how he stalks, how he endures, and how he learns to strike again. If you were Julian Robertson in 1999 watching the world go mad while your discipline cost you billions, what would you do? Hold your ground or give in to the mania? Comment below, because in the next section, we'll uncover the psychological trap that breaks most traders long before the market ever does. The psychological trap or core problem. There's a moment in every trader's life when silence feels heavier than loss. When your screen glows red, your strategy fails, and all the logic you built feels meaningless. That's when the real test begins. Julian Robertson knew this moment better than anyone. He used to call it the break, the point where your system, your discipline, your intellect all collide with your humanity. You see, the psychological trap of trading isn't losing money. It's losing identity. It's when your self-worth becomes tied to the market's next tick, when every move feels personal, when a loss feels like judgment, and a profit feels like validation. Robertson warned his team about this. He would say, if you let the market define your emotions, you've already surrendered your edge, because the market doesn't care. It doesn't care about your logic, your pain, or your brilliance. It only reflects back what you project into it: fear, greed, hope, or mastery. And here lies the ultimate trap. The better you become at analysis, the easier it is to rationalize emotion. To disguise fear as caution. To call hesitation patience. To call denial conviction. Julian Robertson built an empire by mastering that boundary, the razor-thin line between conviction and ego. But even he, the tiger himself, confessed that at times the mind fights its own logic. He once admitted to a colleague, when you've spent your life being right, it's hard to watch the world reward wrongness. And that's the trap that devours traders, not the wrong trade, but the refusal to accept that right can lose for a while. Julian's story reminds us that markets don't just test capital, they test character. Because when you're right too early, the the world doesn't see wisdom. It sees failure. And when you're wrong with everyone else, the world calls it bad luck. So the mind begins to twist itself, chasing comfort instead of truth, consistency instead of courage. But Robertson's mental blueprint had one saving grace: detachment. He trained himself and those around him to treat the market like a mirror, not a verdict. To see it as reflection, not judgment. He said once, in one of his last interviews, "The market can humble you, but only you can humiliate yourself." And that is the mental blueprint modern traders forget. Trading isn't about conquering the market. It's about conquering the parts of yourself that need to be right, need to be rich, or need to be validated. Because in the end, every trade is a conversation between patience and pride, between fear and foresight, between the part of you that wants to win now and the part that wants to win forever. Julian Robertson chose the latter. Even when the world called him outdated, he stayed grounded in timeless truth. Discipline outlasts hype. Character outlasts luck. And emotional mastery outlasts every bull and bear cycle. So if you ever find yourself staring at a losing chart, remember this: you're not losing to the market. You're losing to the version of yourself that still believes trading is about prediction, not preparation. Be the tiger. Wait, watch, strike only when it matters. Because in this jungle, survival doesn't belong to the fastest or the smartest. It belongs to the most mentally prepared. Have you ever caught yourself trading from emotion, trying to win back control instead of accepting the loss? How do you fight that inner battle? Comment your story below, because the true test of a trader isn't the market. It's the mirror.